Welcome back to the Say System channel, where we turn market data into wealth insight. Today, we're breaking down the incredible 5-year transformation of key assets. We're going to look at the S&P 500, Nasdaq 100, gold, U.S. housing, Bitcoin, and Nvidia, using the latest market data you see on screen. From 2020 to 2025, the markets have been on a wild ride. We saw explosive liquidity, major inflation shocks, rapid rate hikes, and the big correction in 2022. And now, we're in the middle of the 2025 Bitcoin and AI volatility cycle. These two powerful engines of the digital era are pulling back sharply after hitting historic highs. But despite all this turbulence, one thing is clear. Bitcoin and AI are the long-term forces that are completely redefining how money, value, and productivity work in our new digital economy. Let's start by looking at the market's foundation. 5-year chart reveals how traditional assets have performed from 2020 until now. First up, the S&P 500. It's up 105%. The backbone of the U.S. equity market literally doubled in 5 years. This is despite a 25% correction back in 2022 and another pullback in early 2025 as those sky-high AI valuations started to cool off. The S&P 500 continues to prove that long-term compounding can survive any cycle shock. Next, we have the Nasdaq 100, which surged 163%. The tech-heavy Nasdaq easily outperformed the S&P 500, but it came with much higher volatility. It saw a massive 35% decline in 2022 and another sharp repricing this year as an momentum reset. The lesson here is that innovation pays, but it definitely demands some emotional resilience. Now, let's talk about gold. It quietly outperformed both the S&P and the Nasdaq, with a gain of 167%. Gold has steadily climbed through inflation, currency debasement, and all sorts of global uncertainty. It proved once again that scarcity holds its value, even in a digital world. And what about housing? The U.S. housing CPI is up 43%. Housing has provided modest but very consistent growth, even after adjusting for inflation. It remained a real asset stabilizer throughout this entire turbulent cycle. Together, these assets form the foundation of our traditional economy. But as you can see, two other assets stand head and shoulders above everything else: Bitcoin and Nvidia. Let's dive into Bitcoin. Bitcoin chart shows an absolutely staggering performance. Bitcoin is up 773% over the last 5 years. It went through a massive expansion, but it was punctuated by two violent cycles. Remember the crypto winter of 2022? Bitcoin crashed by about 74%. And now in the 2025 correction, it's currently retracing from its recent highs, forming a fresh downtrend. But even with all this volatility, Bitcoin's long-term performance completely dwarfs every single traditional asset. This year, 2025, has been pivotal. It marks Bitcoin's major shift into the institutional world. We're seeing a U.S. strategic Bitcoin reserve initiative with a target of up to 1 million BTC. Over 40 U.S. states are advancing pro-crypto legislation. Adoption in the Asia-Pacific region is surging. Bitcoin ETFs now hold over $179 billion in assets under management, and we're seeing record institutional flows into corporate BTC treasuries. Despite the price swings, Bitcoin is increasingly mirroring macro liquidity cycles, monetary policy, and institutional buying patterns. Bitcoin is no longer just a speculative bet. It's on its way to becoming a global monetary asset. Now for the strongest performer of them all, Nvidia. NVDA chart shows an unbelievable return of 2,380% over 5 years. Nothing else in the market even comes close. This explosive growth is a direct reflection of exponential demand for GPUs, the scaling of AI models, massive data center expansion, and huge spending on sovereign and enterprise AI. But, just like Bitcoin, Nvidia also faces serious volatility. It had a gut-wrenching 66% downturn in 2022. and it's currently experiencing a major pullback from its highs in this 2025 correction. Still, Nvidia remains the core infrastructure of the AI revolution. You could say that if Bitcoin is digital gold, then Nvidia is the digital power plant. It's the engine driving the entire intelligence boom, and its performance reflects that unique position. So let's put it all together and look at the cross-asset perspective. The hierarchy is undeniable when you look at the chart. At the very top, AI represented by Nvidia and Bitcoin dominate long-term returns by a massive margin. Below them, traditional assets are growing steadily, but far, far slower. The key insight here is that digital assets swing much harder, both up and down, but they also compound much faster. And what drives it all? Liquidity. It's the fuel for the entire market. When liquidity tightens, assets like Bitcoin and Nvidia are often the first to drop. But when liquidity expands, they are the first to lead the surge upward. We are literally watching the birth of a new digital economy in real time. This brings us to a crucial point. Volatility transfers wealth. Volatility often feels like pure destruction, but history and our chart today show the exact opposite. Volatility is how wealth moves from one group to another. Investors who understand volatility don't just act decisively. They act strategically, increasing exposure to volatile great assets to capture potential high long-term returns. Think about 2008, 2020, 2022, and now what we're seeing in 2025. They all follow the same rhythm. Fear causes panic selling. Prices collapse. And then, strategic investors with a long-term plan accumulate assets at a discount. When the recovery comes, their wealth multiplies. If you zoom in on the day-to-day charts, volatility looks terrifying. But when you zoom out, it becomes a powerful compounding engine. This is the fundamental reason why dollar-cost averaging works. And it's why our triple DCA method supercharges the effect by doubling or tripling your investment during those deep dips. So remember, volatility doesn't destroy wealth. It simply redistributes it from the impatient to the disciplined. So what are the key takeaways for you as an investor? First, the 2025 volatility we're seeing in Bitcoin and AI is not the end of their story. It is a natural and expected part of their growth cycle. The most important thing is to stay invested. These corrections are where compounding truly accelerates for the next leg up. Second, it's wise to balance your portfolio. Keep real assets like gold and housing as your stabilizers, but make sure you have exposure to the digital growth engines of Bitcoin and AI. Third, follow the structural forces. Bitcoin represents the digitization of money. Nvidia represents the digitization of intelligence. These are multi-decade trends, and now is just the beginning. But Bitcoin and AI are the powerful engines that will drive future growth. The digital economy isn't coming anymore. It's already here, and it's reshaping wealth faster than any period in modern history. If you found this analysis helpful, please hit that like button, subscribe to the channel, and drop a comment below. Who do you think will lead the next 5 years, Bitcoin or AI? This is the Sate System channel, where we turn market data into digital wealth intelligence. Thanks for watching.